The Labor Department reporting first-time unemployment claims hitting 719,000 last week. That's 44,000 more than expected and higher than the week before, despite signs of overall improvement. But ADP reported private payrolls expanded at their fastest pace in September last month. My next guest says recruiter sentiment is at the highest since the pandemic began. For more, let's welcome in Evan Sohn, chairman and CEO of Recruiter.com. Evan, so you're feeling good. Your sentiment is high. What does that mean?
Well, yeah, you're right. So it's up to 3.8, the sentiment from last month's 3.7. So it's certainly the highest we've had since we started the Recruiter Index at the beginning of the pandemic. But there's some interesting things that we're actually seeing. The workloads went down from 18 to 16 over the past month. COVID's impact on jobs are actually up from 17% to 27%. And this is more again how the recruiters are actually feeling. So we're seeing this strange phenomena where the workloads, and if you look at the employment numbers, the college-educated jobs are actually getting filled much, much faster. That unemployment level is actually much lower than the non-college-educated jobs. So we're still waiting for those less skilled labor or the non-college-educated jobs to really come back. And if you look at the data that we had, we saw a really good increase in the logistics supply chain by about 40% in terms of the in-demand from last month to this month. And we're really hoping that that's going to have a nice surge in the actual employment numbers for the month. Another thing that actually flipped is the priority of candidates shifted to compensation over remote work. And these two have been fighting it out neck and neck for a while now. But the last time that happened, we really saw a good surge in the larger volume roles like logistics. So you see now on the graph now, IT and healthcare still remain pretty high sentiment, although IT is slightly down. That can actually bode exactly what I was saying before, that those roles, the expansion of the IT really happened. And now we're going to start seeing a little bit of a slowdown as those jobs are really harder to find.
So the flip of compensation over remote work, that really reflects the idea that Americans are psychologically ready to go back to work, go back to the office, go back to things as normal. They're not as concerned about the pandemic and catching COVID, for instance.
Yeah, that's right. Someone asked probably months ago, gee, are people not going back to work because of fear? Or was it because they got their stimulus check? As you see now, they want to go back to work. Compensation is now taking over slightly again from remote. So people are ready to go back to work. And let's just hope the jobs are there. The ADP report showed a really nice bounce in leisure and hospitality, representing a real significant percentage of that. I think it was 32% of the total ADP jobs were actually in leisure and hospitality. So those are really in the less college educated. And again, I'm not going to try a generalization, but more volume oriented jobs.
Which subsector of services is the slowest to come back, the slowest to show that bounce?
Yeah, I think the customer service and retail are still really lagging. It's those customer facing roles. One thing that we started tracking a few months ago was the use of video. Every industry is changing, or most industries are changing as a result of the pandemic. And we really believe that video first screening will really play a significant role. And we now have 1 out of every 3 of the recruiters that participate in the survey are using a dedicated video screening tool, but only 20% actually require a video first. And that would probably tell you that there are far fewer customer-facing roles that are getting out there right now. So that would say your customer service, your retail sector really want to see those, bounce back in order to really see those numbers really, really move quickly.
Evan, great to get your insights. Thank you. Evan Sohn.
Shepard Smith here. Thanks for watching CNBC on YouTube.